The drop in spending has gotten really serious. I used to own 4 or 5 Hermes bags. I especially loved the Lindy. I bought 3 or 4 of those, maybe even more. As for Louis Vuitton, I've lost count. But honestly, I didn't even like carrying LV bags, so I ended up selling all of them. There was a time I stayed at home for over a year. Some of my businesses failed, some I handed over to others. Basically, I had no income at all. I only had a little savings, and the returns were about 2 to 3,000 yuan a month. That's like being on minimum support. I lived super frugally for more than a year. Only in the past 6 months have I started doing live stream sales, but now I don't carry any of my LV or Hermes bags. I just use a canvas bag I bought on Pinduoduo for 17 yuan. That's just over $2. Bags, in the end, are just things. Unless I come across something I really, really love, I don't plan to buy any more designer bags. I've come to believe that if something is cheap, then it's good. I used to not even bother with clothes that were under 2,000 yuan if they were thick, or under 800 yuan if they were thin. I just swiped my card without a second thought. But now, this shirt I'm wearing today cost 17 yuan with free shipping from Pinduoduo. These camo wide-leg pants were 50 yuan, also shipped free. I only buy clothes from Pinduoduo now. I don't even shop on Taobao anymore, let alone go to the mall. I just search for the cheapest options. To me, Pinduoduo clothes are the cheapest, and you can return them for free too. But honestly, I hardly ever return anything. They're so cheap that I already feel lucky just to be able to get them. I'm done with spending big on bags and clothes. I only buy them if they're the absolute cheapest. If not, I don't even consider it. One person commented that this woman's story is a powerful example of how economic changes are deeply affecting how people spend. Going from high-end luxury brands to Pinduoduo's 17 yuan bags isn't just a downgrade. It's a way of coping with financial pressure and reevaluating what really matters. Another person joked, when someone who used to own several Hermes bags say, bags are just things, it really hits different. The shift isn't just a personal change, it's practically a snapshot of today's economy. For years, Hermes built a fortress of luxury with rare products, exquisite craftsmanship, and a strong appeal to the ultra-wealthy. Bags like the Birkin and Kelly weren't just fashion items, they were status symbols, markers of unshakable wealth. But now, an economic chill from the East is starting to reshape the luxury market. Honestly, I think this trend of spending less might not be reversible. Just the other day, I had dinner with a friend in Shanghai who makes 1,000,000 yuan a year. She used to chase Hermes and Chanel like crazy. This year, she's completely downgraded to Longchamp. Back then, we used to feel like we had to get Cartier or Van Cleef in our pels. Like, if you didn't have that Alhambra necklace, something was missing. But this year, everyone's into gold, jade, and pearls instead. People just don't want to pay that premium for the brand anymore. They'd rather buy something that actually holds value. In the past, when we got together, we'd talk about which new bag, jewelry, or shoes we had our eyes on. Now, everyone's comparing what amazing bargains they found or how much they saved. And it's not just consumers turning away from Hermes. In the first quarter of 2025, the company's financial report came as a cold shock. On April 17th, Hermes revealed that sales in Asia, excluding Japan, grew just 1.2%, far below analyst expectations of 4%. That region, once fueled by China's strong demand, was considered a major growth engine. Overall revenue hit 4.1 billion euros, up 7.2% year-on-year, but still missed market expectations. Investors didn't take it well. The stock dropped immediately, though it recovered slightly later. That 1.2% growth figure caused a stir, not because Hermes is collapsing. In fact, they saw 11% growth in the Americas. The concern is what the number represents. Economists say it shattered the illusion that China's luxury spending is limitless. It also broke the myth that Hermes is immune to economic cycles. Hermes CFO Eric du Alguet said the weaker performance was due to reduced foot traffic in Chinese stores, caused by the downturn in the real estate market, and also because of a high base last year. His explanation was diplomatic, as you'd expect in a corporate earnings call, but in China, the phrase real estate downturn carries a much heavier meaning. What's more, in the same week Hermes announced its earnings, its biggest rival, LVMH, also reported its results. The fashion and leather goods division at LVMH saw a surprise decline in sales, down 11% year-on-year in Asia, including China. The 1.2% growth reported by Hermes is seen as excellent compared to others. Bernard Arnault, The CEO of LVMH also admitted that the situation at the beginning of the year was unstable, impacted by tariffs and geopolitical tensions. This contrast highlights several issues. First, the difference in market reliance. Hermès' sales in the Asia-Pacific region, excluding Japan, make up 48% of its total, while LVMH's share is around 30%. This means that fluctuations in the Chinese market have a much more direct and significant effect on Hermès. Second, looking at brand strategy, Hermès' extreme scarcity approach and its high net worth clientele give it an edge in withstanding economic downturns, compared to LVMH, which has a broader product line and a wider target audience. This explains why, even with weaker than expected results, Hermès' stock has remained relatively strong. In February, its market value even briefly surpassed 300 billion euros, about 341.2 billion US dollars, and on April 15th, it overtook LVMH to become the most valuable luxury goods company in the world. Investors seem to trust Hermès' long-term stability, seeing it as a safe haven in turbulent markets. However, even a safe haven cannot fully escape the storm. A 1.2% growth, especially for Hermès, and a market used to double-digit growth, is a clear warning. It signals that China's economic problems have become so severe that even the wealthiest consumers can't completely shield themselves from its impact.
I've noticed that many people haven't realized just how serious the downgrade in consumer spending is. I went to a luxury goods outlet in Huangpo over the weekend, and I could barely find anything at full price. Items from brands like Balenciaga, McQueen, and Versace were priced at just a couple thousand yuan, while Armani and GCDS t-shirts were down to the low hundreds. In the past, you couldn't even buy these at such low prices.
In summary, China's market is really sick, and this illness is not mild. Hermès' lack of growth in China is not just a challenge for one company or industry, it reflects deeper issues with China's economy. For over a decade, the wealth of China's affluent class grew almost in sync with the real estate market's skyrocketing prices. Property weren't just places to live, but also the most important investment and a symbol of wealth. The sudden increase in paper wealth for many directly fueled a strong demand for luxury goods. For those who owned millions or even hundreds of millions in real estate, spending 100,000 yuan on an Hermès bag seemed trivial. The prosperity of real estate acted like a giant lever, driving exponential growth in luxury goods consumption. However, as the Chinese government has attempted to regulate the real estate market in recent years, with policies like the 3 red lines and housing for living, not for speculation. Yet these regulations have increased the risk of a hard landing in the real estate market. Major companies like Evergrande and Country Garden have faced massive crises, unfinished buildings are popping up everywhere, and home prices continue to drop. All of this is quickly eroding the balance sheets of the middle class and the wealthy. What was once paper wealth is now showing its fragility. As people realize their biggest asset is shrinking, or may even become a burden, their desire to spend on non-essential items naturally declines. Eric Duallerget, the CFO of Hermès, mentioned that the decline in store traffic reflects the direct impact of the reversal of the wealth effect. When people feel pessimistic about their future income and anxious about the value of their assets, even if they still have some money, they tend to save more and cut back on conspicuous consumption. Naturally, the desire to shop at Hermès fades. This isn't just about money, it's about confidence. Confidence in the economy, in the safety of personal wealth, and even in the country's development path. All of it is shaking. However, many have suggested that attributing Hermès' slowdown in performance solely to the real estate downturn and the high base effect is a bit of a superficial explanation. We need to dig deeper into what has truly eroded consumer confidence and caused a market that was once a goldmine for global brands to now go cold. First, China's wealthy are gradually losing their sense of security under political pressure and wolf warrior diplomacy. Under Xi Jinping's leadership, China's domestic political environment has become increasingly tense, with tighter ideological control and shrinking social freedoms. On the international stage, China has adopted a confrontational stance, worsening its relations with Western countries. The U.S. has raised tariffs on Chinese goods, and geopolitical risks, such as the situation across the Taiwan Strait, have cast a shadow over economic prospects. For China's affluent class and entrepreneurs, this combination of internal and external political changes creates a profound sense of insecurity. They're not only worried about the safety of their wealth, but also about personal safety and freedom. In this atmosphere, protecting life and assets becomes the priority. The conspicuous consumption of luxury goods might even draw unwanted attention and risk. This lack of security caused by political factors is another major reason behind the reduction in high-end consumption. At the same time, Xi Jinping's recent promotion of the Common Prosperity slogan, which is presented as a blueprint for social fairness, has sparked widespread concern among the wealthy and business community. This is especially true when combined with the crackdown on tech giants and the education industry. Many interpret this as the beginning of a new wealth distribution political movement. These concerns are not unfounded. In a system lacking independent judiciary and with weak property protection, wealth accumulation and ownership are always accompanied by uncertainty. When political winds shift, personal property can be redistributed because of a slogan or policy. This fundamental doubt about the stability of private property has significantly dampened the investment and consumption willingness of the wealthy. They are more inclined to move their assets overseas or hold cash and low-risk assets rather than buy luxury items that symbolize status and wealth. Potential Hermès customers might be too busy thinking about how to escape, rather than lining up for a new Birkin bag. Meanwhile, the U.S.-China trade war has undoubtedly been one of the key external factors exacerbating China's consumption downgrade, and it has a significant negative impact on the domestic market. First, the tariffs imposed by the U.S. directly impacted China's export manufacturing sector, leading to a decline in orders and squeezed profits. This has indirectly weakened the purchasing power of a significant portion of the population. Given this context, combined with factors about job prospects, consumer confidence has taken a heavy hit. People have become more cautious about spending on non-essential items, big-ticket goods, and brand-name products. In addition, to the wealthy, the legacy of the zero-COVID policy and the high unemployment rate among the youth have also severely impacted the potential Hermès consumer base. The nearly 3-year-long dynamic zero-COVID policy has caused immeasurable damage to China's economy and society. Repeated lockdowns, factory shutdowns, and supply chain disruptions not only directly affected production and consumption, but also severely damaged the vitality of businesses and eroded public confidence. Although the policy abruptly shifted at the end of 2022, its after-effects are still lingering. Many small and medium-sized businesses have shut down, income expectations have weakened, and the scars are still evident. What's even more concerning is that youth unemployment remains high. Although the official data once became so high that it stopped being published, after some optimizations and adjustments, it was later released, showing that the actual situation is even worse. The latest data from China's National Bureau of Statistics shows a slight improvement in the youth job market in March 2025. The unemployment rate for urban laborers aged 16 to 24, excluding students, was 16.5% in March, a small drop of 0.4 percentage points from 16.9% in February, ending a 2-month rising trend. However, it's important to note that this data comes from a new set of statistics adjusted by the National Bureau of Statistics. At the end of 2023, explicitly excluded students from the unemployment rate of the 16 to 24 age group. At the same time, the data also shows that the unemployment rate for the 25 to 29 age group, excluding students, was 7.2% in March, also slightly lower than the previous month. Although there's a marginal improvement in youth unemployment, the rate is still significantly higher than the overall national urban survey unemployment rate of 5.2%, showing that the employment situation for young people remains severe. Analysts point out that while March's data showed positive changes, youth unemployment is expected to remain a major focus for China's economy. Record numbers of university graduates will enter the job market this year. The effectiveness of related policies and the future direction of the job market will still need continued observation. Thus, while luxury consumption is mainly driven by the wealthy, overall societal confidence and expectations are interconnected. When pessimism spreads through the lower and middle classes, even the top-tier consumption cannot remain completely unaffected. Experts conclude that Hermès' case is a reflection of the economic difficulties under the current governance model of the Chinese Communist Party. Over-centralized power and inadequate protection of private property have continuously harmed economic vitality. Unless there are fundamental political and economic reforms, it will be difficult for China's economy to emerge from its current challenges, and the chill in the luxury market will be hard to dissipate. Some commentators also note that no brand, not even Hermès, can completely separate itself from the macroeconomic and political environment it operates in. The inherent fragility and unsustainability of China's economic model under the CCP are increasingly becoming apparent. The so-called Chinese miracle may be entering a phase that requires re-examination and questioning.